Hi, everyone. My name is Brad Porter. I'm one of our audit principals here on behalf of Lauterbach and Amen. We are so very grateful that all of you could join us here today for this webinar session on GASB 96, which pertains to subscription-based information technology agreements. It's my goal today to ensure that everyone walks away from this session feeling a little bit more confident in the requirements of the standard, as it is quite complex. My second goal for today is to make sure that all of you tuning in can stay awake during a 45-minute session on IT agreements. So please, please, please get yourself an extra large cup of coffee for this one. Before we get into the material for today, I did want to preface this presentation with a couple of comments on the implementation guidance available to us thus far. There has not been a detailed implementation guide released by GASB on this standard quite yet, like there has been for GASB 87 and lease reporting. So given the intricacies of this topic, we do promise to continue keeping all of you updated as material is published and made available by GASB. Now, in terms of our agenda for today, we'll be covering the following topics. We'll start with a basic overview of the standard. We'll move on to the goals of GASB 96 and what the standard is seeking to accomplish from a financial reporting perspective. We'll talk through the implementation date, the true GASB definition of what a subscription-based IT agreement is. And from this point forward, you will hear me reference those as SBITAs. I'm sure you probably can imagine that saying subscription-based IT agreements multiple times throughout this webinar will get a little bit tiresome. So those will now be known as SBITAs for the remainder of the presentation. We'll then move on to discuss what your responsibility is as a client versus ours as your auditors. Most importantly, we'll walk through the decision tree that will aid in the determination process of whether an agreement will apply or not. And we'll end with an example that should help to tie everything together in terms of some of the concepts that will be discussed today. So let's begin with a quick overview of the standard. We've already discussed kind of a quick summary of what the standard represents. But in addition, GASB 96 establishes that a SBITA results in a right to use subscription asset, which will be classified as an intangible asset in your audits, as well as the reporting for the corresponding subscription liability. Now you'll see the key terms of right to use asset and subscription liability brought up later in the decision tree, so pay close mind to those terms. Governments can also capitalize certain implementation costs in addition to the right to use asset, which we will discuss what those allowable capitalizable implementation costs look like later in the webinar. And lastly, the standard also provides the foundation for the additional financial statement and footnote disclosures that will be added to your audits, which we will discuss in more detail later in the presentation. So what are the goals of GASB 96? You're probably thinking to yourselves to give us all an extra headache or two, right? Well, in all seriousness, I know GASB has been on a transparency kick lately, with many recent standards really seeking to provide more useful information on the face of the financial statements and related disclosures. From a comparability standpoint, a primary responsibility of GASB as a whole is to ensure that financial statements are uniform and comparable across all governmental audits, and GASB 96 is doing just that. With regards to consistency, it is important that the same practices are applied across similar types of arrangements. GASB 96, as many of you probably know, is essentially a copy-paste of GASB 87 for lease reporting, but applied to subscription agreements. Having spent far more time than I'm proud to admit reading through GASB 96, what I can tell you is that the two are practically identical in terms of the application. So something to keep in mind, given that most of you have gone through the GASB 87 implementation process at this point. Now, when will GASB 96 take effect? As you can see, it will take effect with fiscal years beginning after June 15th, 2022, meaning the following year ends will require implementation. And these are some of the more common year ends that we see across our audit group. It will begin with June 30th, 2023 reporting. We have a couple of November 30th and December 31st year ends that this will certainly apply to. And then into 2024, we have our February 29th, March 31st, April 30th, and May 31st year ends. I tell you, you April year ends out there, really look out with the way that the GASB releases their standards. By then, there will be plenty of clients that we've implemented the standard for, so that always works to your advantage. In addition, it's very likely that as time continues, GASB will have their implementation guide released by then as well. So that should help to provide some additional clarity. Now, what is a SBITA? That is the million-dollar question that we're all seeking to figure out today. Now, I'm certainly not usually a fan of reading off of the slides word for word, but I think it is definitely important here. Please pay close attention to the bolded and italicized words, as these will be directly tied to the decision matrix later on. A SBITA is a contract that conveys control of the right to use another party's IT software, alone or in combination with tangible capital assets, as specified in the contract for a period of time in an exchange or exchange-like transaction. In order to determine whether or not a contract conveys control of the right to use an asset, you must first assess whether it has both of the following: the right to obtain the present service capacity from use of the underlying asset, and the right to determine the nature and manner of use of the underlying IT asset as specified in the contract. Now, I know I just threw a lot of words at you, but it's very important to note that in 99% of contracts that you will be reviewing, control will likely have already been established. You, as the government, are paying a fair market price for use of a vendor's IT asset with very clear terms that have been mutually agreed upon within the contract. That is control. Now, we also wanted to point out a couple of different examples of the cloud computing arrangements that may meet the definition of a SBITA. I think it's important that we talk through each of these three to first understand the preliminary basis or underlying basis of a lot of these contracts. The first of which is going to be the most common, and that is what we call software as a service. This is where we have a contract that, as the customer, you're provided the use of IT software through cloud infrastructure. I know the term cloud is big nowadays. We have a lot of those cloud storage agreements. A lot of accounting systems are on cloud agreements. So that is what we call software as a service. Now, platform as a service is where a vendor allows a customer the use of their tools or coding language to actually create applications. And now this is going to obviously be pretty uncommon across the board. I know most of us here have a hard enough time working Zoom or Teams on a daily basis, let alone coding a new program, right? So the last one here is infrastructure as a service, and that is where a customer remotes into a vendor's network, server, and other tools to process, store, and operate customer data. Now, it is equally as important to understand what is not going to apply under GASB 96 or what not is a SBITA. I'd like to believe that this is where I get to share some good news with you for a change. Who knew that there would be some good news on a topic like this one? So let's talk through some of the excludable contracts under GASB 96. The first, contracts that include a hardware component where the software component is insignificant. It's worth pointing out that if we have a hardware component that is material enough, this is very likely actually going to be a GASB 87 lease to evaluate. So ultimately, if we have a hardware and software joint contract and the software component is an insignificant portion or insignificant to your financial statements, that contract would not apply under GASB 96. The second would be contracts that have cancellation clauses at any time by both parties, or contracts in which the non-cancelable period has already passed. It will be incredibly important to pay close attention to the cancellation clauses within these contracts. If either party can cancel a contract at any time, it becomes impossible to create a measurement period associated with that underlying contract. And when you can't determine what a measurement period looks like, you can't measure the future outflows under GASB 96. Next, we have contracts that solely provide IT support services. If you outsource your IT function, that is support and not software. I know a lot of you out there outsource your entire IT function. So again, I'm hoping I'm sharing some good news with you today that those IT agreements would not be warranted under GASB 96. Next, we have short-term SBITAs. This is going to be everybody's favorite. Contracts with a term of less than 12 months, including any options to extend, please make note of that, would not be included under the standard. I know there are a lot of agreements out there that are annual renewal. You agree on new terms, you sign a contract for a 1-year period. Those are not going to apply under GASB 96. On the contrary, some of these agreements are forever in nature. They're perpetual licensing arrangements. These are not going to be included under GASB 96 as well. Under these types of agreements, you as the customer have the right to use the software with no fixed term or end period. And again, it all comes down to the measurement period. You cannot measure a measurement period that doesn't have a fixed term or end date. We also have prepaid subscriptions that are not going to apply. If you prepay a subscription, there is no present value of future outflows since the outflow has already occurred, and therefore those prepaid subscriptions would be excludable. We also have immaterial SBITAs. Immaterial is absolutely an auditor term. This is the one that's going to be near and dear to our hearts and something that you'll be working directly with your auditors on. Each of you have a different materiality threshold that applies to your organization. So it's very important that you have a conversation with us or your auditors on a certain threshold to apply to your contract evaluation process. We would need to review the future outflows associated with a certain contract and cross-reference that figure with a materiality threshold specific to your organization in order to determine whether or not it's an includable or excludable contract. Now, we've put together a lengthy list of some common subscription-based IT agreements that we're accustomed to seeing in the government space. This standard, and I can't emphasize this enough, is not a one-size-fits-all approach. So there could absolutely be applicable contracts not included on the list, and vice versa. A contract with a vendor for one of these services listed above may have joint termination clauses that would exclude it, could be short-term in nature, or could be perpetual, as we had discussed. So it is incredibly important that this standard is going to require a lot of specific analyzing of each of these contracts, unfortunately. Now, a couple of common examples that I wanted to make special mention of from this list would be things such as accounting and ERP systems, recreation software for all of those ActiveNet or RecTrack users in attendance today, Municode, where we're storing our ordinances in minutes, remote learning platforms and student information systems for some of you school district clients. For libraries, we have things like databases and management systems, data backup. The list is really endless, and it is going to require a lot of analyzing of your specific agreements. Now, what is our responsibility as auditors? With any new GASB implementation, it's important to outline the general roles and responsibilities related to the implementation process. Your responsibility as a client is going to be primarily the gathering phase, which we've then broken down into a two-step approach. Step 1, prepare a list of all potentially applicable SBITAs, which will include relevant information such as the subscription terms, the interest rates where applicable, payment information, and the services specific to that contract. We highly encourage getting your IT folks involved in the preparation of this document or the tracking mechanism, given the complexities of the contract specifics and how they can play a role in the decision-making process. It is also worth noting that it will be very important to have these agreements saved in a location easily accessible for your auditors, as we will be reviewing these contracts in conjunction with the tracking mechanism that you've put together. I know our SBITA tracker will be available on our website and saved under the GASB 96 posting to our news section, so be on the lookout for that after today's webinar. Step 2 is going to be using the tracker and decision tree to rule out contracts that you feel may not meet the necessary provisions of GASB 96. It's important as a client to develop the preliminary basis for inclusion or exclusion to take place before the audit process to help narrow down the list and give us as your auditors a starting point to work off of. Now, what is our responsibility as auditors? That is going to be to start by reviewing the initial list of SBITAs that you've put together to ensure that we agree with the basis for inclusion or exclusion. This will also include a cross-reference to your general ledger activity report to make sure that there were no additional subscription payments made to vendors that were not included in your initial evaluation. These contracts are incredibly complicated if you haven't gotten that by now. We are absolutely here to answer questions that arise during the evaluation process. I know personally, I greatly appreciate getting questions in advance from my clients because it helps the audit process to go that much smoother. Step 3 is going to be to help our clients with the government-wide journal entries associated with this standard. We'll discuss the entries in a later slide here, but just like we do for capital asset, pension, and debt reporting, we'll be recognizing the long-term contract asset and corresponding liability for full accrual and government-wide reporting. A lot of you are familiar with the conversion that takes place between our fund level and our government-wide financials. The conversion will most certainly be impacted by GASB 96 as it's taking some of those short-term current financial resources measurement focus items and converting them to the full accrual long-term reporting level. And lastly, we will assist with the necessary footnote disclosures that are going to be added to your audits during the report writing process. I know some of you are probably thinking our audit reports are long enough. Well, unfortunately, GASB didn't feel that way. We've got a few more additional note disclosures to add for GASB 96 as well. So now that I've overwhelmed all of you with terms associated with GASB 96, I'm hopeful that the decision tree will really help to break things down into a clear, concise picture for you. Now, I would certainly encourage using this decision tree as you're reading through those specific contracts. I think it'll be very beneficial. And again, this is really the byproduct of all the definitions and things that we've already discussed. So let's walk through the different types of decisions that could come about from GASB 96. Starting with step 1, does the contract convey the right to use another party's IT software? As I had alluded to previously, most contracts, we are going to answer this question, yes. Control, are you paying a fair market price for the contract? Are the services very specific in terms of you have a clear, concise understanding of what services are being provided to you? Again, most of the time this is going to be yes. If not, great, then we can deem that a GASB 96 excludable contract. Step 2, is the IT software contract alone or in combination with tangible capital assets? I want to start by going with the in combination route. So this would be an example of a contract that has both hardware and software components. And as we had discussed, step 3 is going to be determining whether or not the software component is significant or not. If the software component is insignificant, but the hardware component is material, then we would have a potential GASB 87 lease on our hands, but no GASB 96 implications. If the software component is significant, then we go to step 4. Is the contract a licensing arrangement that provides perpetual use of a vendor's software? As we had discussed, if we have perpetual use, if we make a one-time purchase up front, that is not a GASB 96 subscription. If there is a defined period of time, then we continue down the decision tree. Step 5 is the IT software controlled for a period of time in an exchange or exchange-like transaction. Are we dealing with a fixed point in time or a fixed period on the contract? And is it in an exchange or exchange-like transaction? Are we paying a fair market price? If yes, then we do have a GASB 96 subscription on our hands. If not, we do not. So hopefully walking through the decision tree kind of helps complete the circle or tie everything together as it relates to some of those definitions that we had discussed. Now, once we've deemed a contract includable under GASB 96, how do we measure the subscription period? Well, we like contracts that have defined periods of time, right? But by the book, the definition of our subscription period will be the period in which a government has a non-cancelable right to use an underlying IT asset. There are a few stipulations, though, that need to be accounted for within this calculation. If it is reasonably certain that you and the vendor will extend or terminate the contract, we need to ensure that the measurement period is adjusted to increase or decrease the term respectively. Additionally, I cannot stress enough that if there is a cancellation clause that gives both parties the right to terminate the contract at any time, then that would not be an eligible or includable contract under GASB 96. Any periods beyond the optional cancellation date should not be included in the measurement period as well. Now, there are a few very uncommon instances that would require remeasurement of the liability period, which we've included on this slide here, but I'll gloss through these rather quickly as I don't think a lot of these are going to be very common for you. But the first would be any changes in subscription terms or interest rates. If we have changes in the nature of variable payments, if for some reason they were variable and they become fixed, we would need to remeasure the liability with the new terms, because in instances where we have variable payments, it becomes too difficult to calculate the future outflows, and therefore the variable components would be excluded. Now, moving on to the fun stuff, the actual accounting treatment for GASB 96. I do apologize for the small font, but I thought it would be very important to squeeze every bit of information on this slide as we could, given that you'll have these slides available to you for reference after today's webinar. First, we have our initial liability recognition, and this is going to equate to the present value of future outflows within the subscription period using a defined interest rate or an incremental borrowing rate if it's not easily identifiable. If the contract does not have a defined interest rate, we still need to assign it one for present value purposes, unfortunately. If your organization has issued debt recently, you can also apply the interest rate from that debt issuance. I know this has been a very commonly applied method of assigning an interest rate for GASB 87 purposes as well, so something to keep in mind. If for some reason your organization has not issued debt recently, the incremental borrowing rate can be calculated through various online resources that are available. So those can certainly assist. We then have the initial asset measurement, which will equate to the liability that we've calculated, plus certain allowable capitalized implementation costs, less any incentives received. The incentives would be very rare, but this is referencing things such as, significant discounts on certain contracts and such. With regards to the allowable capitalized costs, we have things such as configuration, coding, testing, installation costs, and data conversion costs. But they must be part of our implementation stage, and we'll get to that momentarily. We then, from an asset standpoint, have our annual amortization of the asset, which all of you should be familiar with, your capital asset reporting. This is going to be treated in a very similar fashion. We are amortizing the asset just like we would via depreciation expense for capital assets. So with all that said, I think the easiest way to truly understand GASB 96 is to walk through an example together. I know I've thrown a lot of high-level concepts at you, so let's start with an example. So we're dealing with the Anywhere School District that has a June 30th, 2023 year end. Some background information on the subscription. It has a start date of July 1st, 2022. An end date of June 30th, 2025. So we're dealing with a fixed period, which is great. Our first payment is going to be due July 1st, 2022. So this is at the start of the contract upfront. We're making annual payments of $5,000, which are paid at the beginning of the period. And we have a defined interest rate of 3.5%. We did incur some additional costs related to the subscription. We had $1,000 of preliminary project stage costs that were paid to a consultant for assistance in selection of software, which will be expensed as they're incurred. Only costs incurred in the implementation stage can be added to the capitalizable base. In this case, we had $3,000 of data conversion costs to the new software. There are also some costs in the operation and additional implementation stage costs for $2,000 to convert legacy data on an old server to a vendor's cloud storage. As I pointed out, only implementation stage costs are capitalizable, and therefore the operation costs would be expensed as incurred as well. So with all that said, let's jump into the present value calculator for the subscription liability. It's worth pointing out that this present value calculator will be included in L&A's SABITA tracker. So keep that in mind. This should look pretty familiar to those of you who have gone through the GASB 87 process. We'll start up top. We have our regular payments of $5,000, as previously mentioned. We had no residual value at the end of the subscription. We had a first payment date of July 1st, 2022, paid up front. We have 3 annual payments through 2025. And then we assign it the number 12 in the increments between payments, as it is an annual payment. And as pointed out, we have a defined interest rate of 3.5%. Now, the when are payments made question is incredibly important. It's going to drive whether or not the first payment is 100% principal or not. If it is paid at the beginning of the period, we have no interest accrual to account for. So in this case, we know we made our first $5,000 payment on July 1st, 2022. So the present value of future outflows on the subscription equates to $14,498. On the right here, we have an amortization table that we've built. We have annual payments for 2022, 2023, and 2024. As pointed out, we have our first principal payment as 100% principal, given that the payment was made upfront. In each subsequent year, we have an interest component that is being calculated from the present value calculator. We will walk through journal entries after we get through the calculation of the subscription asset. Now, how do we calculate the subscription asset? As I had previously mentioned, the asset equates to the liability that we had calculated on the previous slide, in addition to any initial implementation stage costs, which we determined to be $3,000. So we now have an asset that we're going to be amortizing of $17,498. Now, even though we are doing an annual payment under this contract, it's worth noting that we should still be creating this amortization table on a monthly basis. And I only say that because for the sake of our example, we like a nice clean year end. The contract terms are coinciding with the fiscal year. That's not always going to be the case, right? Not every contract's going to start with the first day of your fiscal year and end with the last day of the fiscal year. So it's important that you are still doing this calculator based on a monthly basis for depreciation purposes or amortization purposes. It's also worth pointing out that the asset will be amortized straight line over the contract period. So you can see that there's a consistent, uniform, straight line amortization method for this asset. I did also want to point out on the asset topic that all applicable GASB 96 subscription assets will be shown as separate line items within your governmental or business type activities capital asset footnote disclosure. They will show up as GASB 96 intangible assets. Now that we've covered the calculation of the liability and asset, let's move on to discuss the journal entries associated with these transactions. Now, the first slide here is going to be the entries for our modified accrual accounting, which would be for our governmental funds, which we know have a short-term current financial resources measurement focus. These entries should look incredibly familiar for those of you who have accounted for capital leases or installment contracts in the past, as they are the same income statement entries that you would have made under those types of agreements. We need to start by picking up the capitalized outlay expense. We then pick up the subscription liability revenue that will be converted at the government-wide level to our long-term assets and liabilities, respectively. The asset being the capital outlay expense and the long-term debt being the other financing source that we're recognized for the subscription proceeds. For the entry to record the first subita payment, you'll recall that the first payment was 100% principal, and therefore, given that it was paid at the beginning of the term, we have a flat $5,000 expense for principal and a credit to cash when the payment is made. But I did include the full entry here for years in which there would be an interest component for reference. Now let's talk through the government-wide or full accrual fund reporting on the full accrual basis. We know the full accrual basis deals with the economic resources measurement focus. So long-term items are picked up on the balance sheet in this case. Now these entries here are basically converting our short-term modified accrual entries to the long-term full accrual approach. So the first difference is that the credit from our previous entry, which was going to our other financing source, would be recognized instead as a liability to account for the proceed revenue. And this would be obviously pertaining to the subscription liability. We'd also be recognizing the capital outlay expense as an intangible long-term asset instead. So that is what the second entry is doing. It is taking our initial expense and converting it to the long-term capitalized asset. In addition, the first payment on the contract would be reducing the liability account with our debit, as opposed to expensing the payment as principal on the government fund level. In the last entry here would be to begin recognizing the amortization on the capitalized intangible asset. You'll notice that the credit is going to an accumulated amortization account, which would be a contra asset, just like we do for depreciation purposes where we're building up our accumulated depreciation balances. Now that we've gone through the accounting and an example, I did want to also briefly touch on the footnote disclosures that L&A or your auditors will be including within your audits. As if there weren't enough pages, we are going to be adding just a few more for a general description of the contracts that did meet the provisions of the standard, which will include the contract terms and conditions. We'll also be including the total GASB 96 subscription assets and related accumulated amortization amounts, which, as I mentioned, will be reported within your capital asset footnotes. And we'll be accounting for the, or including the amount of outflows that were made on the GASB 96 contracts during the fiscal year. In addition, the standard will require us to disclose the total principal and interest requirements to maturity, just like we do for similar long-term debts, where we have the next 5 fiscal years and then an amount that will be cumulative through the remainder of the contract terms. We'll also be required to disclose any commitments under the SEBITAs before the commencement of the actual subscription term. So this is kind of like a subsequent event where we'd have a contract where there's a formal agreement in place, but the measurement period will begin after the fiscal year end. And then any impairment losses, which will be very unlikely under GASB 96. So it's not something that I feel any of you should be overly concerned with. That concludes today's webinar. Thank you all so much for taking the time out of your day to join us for this. We're very grateful that all of you are taking the proactive steps to get out in front of this complicated standard. My hope is that you're feeling a little bit more confident on the steps that you and your teams are going to be required to take for the GASB 96 implementation process. L&A is here for you every step of the way, so please don't hesitate to reach out to your primary L&A contacts to help answer any questions that arise during the analyzing process. And with that, I hope everybody has a great rest of their day. Take care.